Hello Dairy Today viewers, from the Stuart Peterson Advisory Team. Here's your Dairy Week in Review for the week of February 24th, 2012. Recapping the trading week here on Friday, we did see some widespread pressure throughout the marketplace in general. The number one culprit was actually going back to last Friday's milk production report, which really put a cloud over the marketplace and pressured things lower this week. So we'll go ahead and start with cheese. As you can see, both blocks and barrels really hitting the path of least resistance and heading lower for the week. As you can see, blocks leading the charge down 2 cents for the week. Barrels not too much behind that, down a cent, finishing at 147 even. Also looking at the butter market, did see some signs of life there, up a quarter, finishing just below 142 for the week, and finishing with powders. March whey continues to really tread water here, finishing the week a penny lower in that 55-cent region. And similar story for March non-fat dry milk, finishing the week lower as well at 131. Taking a look at our Class 3 milk prices for the week, once again some very sharp and significant losses, so we'll go ahead and take a look at the quote board on that. First with our front month contract February, soon to expire actually next week, so we will see that contract most likely expiring that 1605 to 1610 region. Also looking at some of the other nearby months, once again noting the very significant losses there, both March and April down anywhere from 42 to 55 cents. And one thing to note, the April contract did break below the $15 mark, reaching as low as $14.84 about midweek. So good to see that we did see a little bit of a bounce here to close the week, back above that $15 mark. And then once again going into the May and June months, those 2 months hit the hardest, down 77 cents and 67 cents. So continuing to see that premium really fall out of these months. Looking at July, the first month of the second half of the year, to break below that $16 mark for the year, closing the week at $15.92. Flipping over the charts to take a closer look at just how severe the sell-off has been over the past few weeks and even months. And we'll start by taking a look at our 2012 Class 3 average price February through December. First noting where we finished here this week, right at $15.82. And it was good to see that we did finish off the lows throughout the week, which were in that $15.70 range. But looking back in that first week, second week of January, where we peaked out here for our Class 3 average price, nearly at that $17.60 mark. So just seeing how much we've sold off here, nearly $2 off that average price. Going back over the past 7 weeks, we've only seen one up week during the sell-off. So overall, technically we could be a little bit exhausted here for the sell-off and could be due for somewhat of a correction as we move into March. Now taking a look at the dry whey market, and overall we have found some very significant support that has really helped out our Class 3 milk price over the past few months as cheese has traded lower and overall dry whey has really held in there steady. But that hasn't been the case for the month of February, so we'll go ahead and take a look at that on the charts. This is the second month dry whey contract, so the month of March on a monthly chart, each of these candlesticks represents a month. So going back to 2009, you can see just how significant this run-up has been. There's been a few corrections along the run-up higher, but going to this month of February, currently this candlestick here, you can see just how significant the losses have been. You can see where we are at now, finishing the week, once again, just above that 55-cent range. And you can see where we topped out in January, nearly 64 cents, and where we bottomed out, nearly 52 cents, so about midway through February. So good to see that we aren't, right back at those lows. Good to see that we have bounced a little bit here, but still overall very significant losses that have really added further decline for our Class 3 milk prices. This week, USDA did release the latest cold storage report for the month of January, so we'll go ahead and take a look at those numbers there. And overall, pretty surprising when we look at both cheese and butter. So we'll start with cheese. Total stocks came in just above that 977 million mark, and compared to the previous month, compared to December of 2011, that was down 1%. So overall, good to see the stocks weren't building, but overall some modest declines, which are supportive. Compared to last year, that number a little bit better, down 7% compared to the previous January. And overall, it is the lowest January cold storage report we've had for cheese since going back to 2009. So that in itself is very supportive as well. Looking at butter, different story there. Saw butter stocks come in just above 171 million. It's a very strong growth compared to the previous month, up 60%. So very strong once again. Really explains the recent slide in butter. And going back to last year, up 44%. So once again, very strong numbers there. So looking at to next week, a few things to take note of. The first one being, with February coming to expiration, we will get the class and component settlement prices out late next week, and also March, we'll move into that front month spot. Looking at key reports out for the week, the first one being the December commercial disappearance report, which will come out Tuesday, February 28th, and also to wrap up the week on Friday, the January dairy products report. From the Stuart Peterson Advisory Team, I'm Rocky Ging. Thanks for watching, and we'll see you next time.